You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.CFRN.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.CFRN.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 19th day of August, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in 30 seconds. That will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, just point any internet-connected browser to CFRN.net/live. There you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box, okay? We also stream the show live on Facebook, YouTube, and Twitter. I apologize that I missed the show yesterday. I attempted to do a shortened version of the broadcast yesterday afternoon. And then right in the middle of that, another life event happened, and I had to end that abruptly. So it's out there in the YouTube channel, but we'll just talk about all of them today. So we'll get you caught up on everything. Alerts that I would have covered yesterday, and of course the alerts I'll cover today. We cover each day on this broadcast everything that happened in the live training room. Michael does that. Then I cover the Logic 247 alerts and the Concierge Trade Alerts. We take a look at the market, bigger picture. The big event this afternoon, of course, at 2 p.m. Eastern. We have the minutes of the last FOMC meeting. Now, that used to be a big deal, and it used to create some pretty substantial volatility in the markets because back then, that was the first time the general public knew what was said behind closed doors. But Jerome Powell has changed things a bit since he came on board. When he does the FOMC, he also does a prepared statement, and then he follows it up with a press conference where he takes questions and provides answers. So it's kind of like 2 weeks later when it's actually time to do the minutes release. I don't think there's any cats left in the bag. I think they've all been let out. So anyway, because we don't know that it won't create volatility, just be flat ahead of the announcement. That's really the best advice. We don't trade news or economic reports. We don't trade even the reaction to the economic reports. We trade the follow-through of the reaction to the news. And I'll show you how that's done here a little bit later in the show today. Okay, now at any time during the broadcast, whether Michael's on or I'm on, if you have questions, put them in the chat box and we will get you an answer. But before we get rolling, let's just open with a word of prayer, a prayer of gratitude. And I just encourage everyone, join me in this prayer. Heavenly Father, we thank you for transforming each and every one of us by the renewing of our mind in your precious word, so that we can be living proof of that good and acceptable and perfect will of yours in each and every one of our lives. Through you, God, we're destined to win, for you have made us more than conquerors. You have made us overcomers of the things of this world. We confess right now, individually and corporately, God, that we are your righteousness that was created in Christ Jesus. Thank you, God, for making us in your image and in your likeness, no less than anyone else, but an original, designed by the loving desires of your heart. We thank you in Jesus' name. Amen. All right, happy Wednesday, or hump day, as some folks call it. Some of us are approaching the hump. Those of us here on the West Coast, other parts of the world, people are well over the hump and on their way into that downward slide into the weekend. Let me give you the numbers from around the world. These would be the cash markets. Right now, the indices. The Dow is up 65 points. NASDAQ is up 37. S&P 500 up almost 8. And the Russell 2000 up 15. The only mover and shaker there would be the Russell 2000, which is up almost 1 point. Now, this whole thing is about this. The all-time historic high based on the price of the current December contract, 33.96.5. This morning in the pre-market strategy session, this was so tight I didn't even put out an official alert, but I just put it on the charts for everyone to see. 33.94 to 33.96. We hit 33.95.75. So we're still 3 ticks away from that all-time historic high. Here's what it looks like on the daily chart. Boy, I'll really be surprised if we don't make it today. Okay, in the commodity basket, crude oil up 8 cents, trading 42.97 last. Gold, sit down. Gold down $42.30, trading 19.70.80 last. We do have a weekly trading zone right there, 1970/71. That puts gold down 2% on the session. Silver down 55 cents, trading 27.52 last. That's a drop of almost 2%. Okay. Now, a $1 move in the price of silver pays $5,000 if you're trading a futures contract, or it costs you $5,000. Except we would never let a trade go that far against us. Now, if we're down half a buck, that means the move in silver equates to $2,500 per contract traded. In the Asian markets at the close, the Nikkei was up 59 points. Shanghai was down 42. The Hang Seng down 188. Now, for the Shanghai being down 42 points doesn't sound like a lot, but it's over 1%. The Shenzhen, which we don't talk about very much, was down 2% on the session. And in the European markets at the close, FTSE up 35, DAX up 95, and the CAC up 39. No movers, no shakers. Seems like we got some pretty quiet trade here as we work our way into the all-time historic high and into the minutes of the FOMC this afternoon. So what we have is we have a mixed day in Asia, we have a green day in the UK, and at the moment it is a big green Radio Wednesday here in the US of A. Michael will take over now, and he'll go through everything that happened this morning in the live training room. When I come back, we'll look at the Concierge Trade Alerts, Logic 247 alerts, and answers to your questions as you put them in the chat box. It's all yours, Michael.
Okay, I'm ready. Here we go. All right. Good afternoon, everyone. Today is Wednesday, the 19th day of August, 2020. Sorry, I was just thinking yesterday was my sister's 50th birthday. But if you have not taken a free trial with us, go to the homepage at CFRN.net. You can go down here to the free 5-day trial and doing it. We got to change the link on that to make it go to Emini Futures trading. Just Valerie, make a note. I'll do it, but you just gotta remind me. And that's gonna bring you. If you click on that, it's gonna bring you here to EminiTradingSchool.com, and all we ask for here or on Emini Futures Trading is for your name, your email, and you can tell us your biggest trading challenge, so we can tailor one-on-one training just for you. Okay. Now let's get to the spreadsheet. Today was another big gold day. Okay, it was really all gold. I don't know how many times I've said this, but these are unprecedented times. If you're not trading futures right now, I don't know why. We didn't trade the euro. The euro had a couple of nice trades today. I think it had three or four nice trades. Crude oil really didn't have anything too attractive, but we had one break-even trade there. The ES, we had one break-even trade there, but that was really nasty today. But gold, we made 134 ticks this morning in gold. So we're up $1,340 on the morning session. Excuse me. Today is 33 minutes and 4 trades. in gold to get $200 a contract, and we took a total of 15 trades. So on the month now, we're up 65. I can't see it. 65, 68. That's over 13 trading days. And so we're averaging $505 a contract per day. We're on our 128th consecutive day of getting our goal without a loss. Not to say that I didn't have a losing trade, but I didn't have a losing day. Okay, again, knocking on wood. On the year now, we're at 59,879, and that's over 153 days, averaging $391 per contract per 2-hour day. And I miss most of the trades, which you'll see right now. I'm gonna go the other way again today because I want to end with gold, because gold is where we had all the opportunity today. Okay, on the ES, it was chopped from the very beginning. Okay, and I tried to take one trade here and I ended up with a break even. I could have taken some profit on it, but I wasn't looking at it because I was watching gold. Because gold is where the money is right now. Yeah. So there really wasn't much. Now the YBR trades on the ES worked out well. Okay, so I know we have a couple of guys. Well, they called me and texted me today, and to my list, Valerie, who were trading, but they're trading the YBR, but I'm not sure they're doing it right. So let me just explain quickly to everyone what's going on here. You see, when you have blue on the YBR and you have an up close and you have bullish divergence, that is a really positive sign. Okay, the price is going to go up. Now it might pull back a little bit, and this is where reading the DOM comes into play. And I've been doing that for you out loud. I'm sorry, I hate to do that in the mic. Okay. But that's where reading the DOM comes into play. And it's years ago, like years ago, in the 90s, you could read the tape on the equities. But what I'm doing now is basically the same thing, but I'm doing it on the futures, and well, it's all part of the training. When you have bullish separation like this right here, you see, and you have blue on the YBR. Now, the best case scenario is going to be when this brown line right here, which is the S1 cycle, is on the other side of the cycle. It's the S1 cycle, but this is the S3 cycle. When it's on the other side of that, if you get a pullback on the green line and you get an opportunity like this, that is the best case scenario right there. Okay, but for the trades that we do in the trade room in the morning, there was a shot right here, and it would have worked out to be probably a break even. But the ES was a mess today. It was a mess. Crude oil was too. We had one break even trade right here on crude, but during the market hours, crude moved up. But when you're going up into the high of the day, and at that time the high of the day was down here, you have to be careful about that. Okay, the YBR trade right here would have given you something. Now you got to remember that you only need one of those a day. You only need one of those a day. Okay. All of this that happened during the break it was going up into the high of the day, put new highs on. So I wouldn't have touched it. I'd have left it alone. And so that was crude. So crude really didn't have anything. Now the euro has been great. There was a shorting opportunity right here, moving down. Another one right there. Another one right there. And I know we have a few partners who were in the room this morning who got their goal on the day right here on the euro. And I didn't have a single euro trade. You know, gold had me so preoccupied that I was just not watching the other markets as much as I usually do. Now, right here, there was a shorting opportunity. Okay, now this was going into the low of the day right here. So, you know, you probably didn't really want to get into it, but it was, you know, it was a great trade that worked out really well. And doing the YBR trades, let me go back and just go over them really quick. We'll start back here at the beginning. Well, this was a little pre-market, but there was blue on the YBR with an up close and bullish separation, and it moved up. Over here, we had red on the YBR, bearish separation, and it moved down. Over here, we had blue on the YBR, bullish separation, and it moved up. I don't know how to explain it any other way. All right, now, put your hats on. Gold. Gold has just been crazy volatile lately. And that's what I want, is the volatility. All right. But our first trade here on gold was this little tiny one right here. And it was break even. Then I missed that one, which would have gotten the goal for the day. And I could have stopped right there at 936. Then it changed directions. And we had this huge move down, which we didn't have a trade set up for. So what I want to say is, you know, I'm starting, excuse me again. I'm sorry. You know, I talk for 2 hours straight, and but what I want to say is that I'm starting to teach people how to read what to expect out of it based on what's on the tape. You know, quote unquote. It's not really tape. Like right now, gold, not gold, but the ES is going to go up to 33.96. And, you know, and so you look for a trade setup. Do you have a trade setup that says it might go there? You got to trade the indicators. Okay. And once you get into a trade, then you can read the DOM and see what to expect. Okay. But 33.96 is coming. And I'm pretty much set on that. But where are we right now on gold? Hang on. Let me slide it all the way over here. Because I know Dwayne was saying earlier, the weekly trading zone down below us. Where was that? Dwayne? Valerie? Either of you? I thought it was 54. And we got all the way down here to 60. Okay, let me get back to where I was. Hang on.
Yeah, 54.55.
54.55. That's what I thought. Okay, so let me get into gold, and you know this is going to take a few minutes because I had 13 trades and I missed probably 50. So let's get to today. Here we go. So my first trade, as I said, was a break-even trade. Now the YBR had a short right there and a short right there. Either one of those is enough, and you can stop trading. Okay, YBR had a long right here. Again, enough. The trades that we do in the room in the morning had a long right here that I missed. Let's see. Hang on. I'm just looking. The YBR had another long right here that would have worked out. Had a short right there that would have worked out. The trades in the morning, I missed this one. There was another long right here on the YBR that would have worked out. Now, you got to understand, you only need one of these trades. Once you work your account up, you only need one of these trades per day. And there's a whole bunch in gold right now. It's crazy. But, okay, here's a YBR that would have stopped out. Okay. Here's another one. No, that wasn't actually one. Here's one that would have worked out. Here's one that would have worked out. This one I wouldn't have done. Here's one that would have worked out. Okay, then we get into my trades. So I had a break even on the first trade, and then I picked up 10 ticks on this trade right here. And then the next trade, I picked up 2 ticks right here. And right here, we were break even. Then over here, there was a trade here I missed, a trade here I missed. I mean, gold is bouncing around so fast that it's really hard. I mean, for me to do everything that I do other than trading, it's really hard. Like this trade right here, I should have made a lot more money on that trade than I did make, but I think I made 30 ticks on that. But right here, we picked up 4 ticks, and that put us at plus 16. And no. I don't know. But on the next trade that I made, I picked up 8 ticks. 8 ticks. Where was my 8-tick trade? This might have been the 8-tick trade right here. And then the next one after that was 20. I picked up 20 on that one. And then on this one, I picked up another 20. And I mean, you can see the way that gold is acting right now. You can see that it's just, target. What did Frank used to say? Target rich environment. It's $10, Paul. $10 a tick. And that's for one contract. So the question was, how much is 1 tick in gold when converted to dollars? And the answer is it's $10 per tick per contract. Okay. And then the market got really crazy. Right in here, I picked up a little bit more. I think 5 ticks. And then right over here, I ended up with a break even on this trade, believe it or not. I was looking for 15 ticks on it because that's what the Dom was telling me. And I didn't move my stop up fast enough because gold was just traveling so fast. I mean, look right here. Between 10.58 and 10.59. That's how fast it was going. So, hang on, I gotta move my mic. Okay. So, you really got to be on your game to be trading gold right now. But I ended up with the break even here because I had to answer a question, and I was looking for 15 ticks. So I threw a target up at 15 ticks, and it went up to 15 ticks, but it didn't fill me. And I had my stop at break even at that point. So it came back out, took me out at break even. Then we had a few small trades, where I hit 5 ticks, 4 ticks. Yeah, right here was a small. And then this one right here, we picked up, yeah, this was 1 tick. Right here, we went from 49 to 50. And this one was 14 ticks. And we picked up 64. And then I put this trade on. Dwayne was talking, and I didn't want to interrupt, but I put this trade on right here. That went for 60 ticks. So I was at 124 ticks at this point. And I'd rather do that kind of one-on-one, Venus. Okay, so we can set up an appointment for that. But I picked up 60 ticks on this one, and then it just got really choppy and sideways. All the markets did at the same time. And then I just started picking away at it. And I got, what did I get on that one? 5 ticks, a break even, 10 ticks, and that was it for my morning session. And I was worn out by that. I'm still worn out. but it's been crazy if you look at gold during the break. Look at that. Now the YBR is giving you everything you need to know. Right here, you got blue on the YBR, you got an up close, you got bullish separation, bang. This one, you got blue on the YBR, but you don't get an up close. No trade. Right on the YBR, bearish separation, bang. Over here, right on the YBR, bearish separation, bang. It's giving you all you need to know. And you know, the colors on the YBR take all these other indicators right here into account. And so all you need is the YBR and the slingshot. And, that's the simplest trade setup that we have. But the thing that we do in the morning session, we're right here. You have a perfect trade setup. It would be like this. Now, I'm going to draw a trend line, but I don't need it because the cycle is red and below the green line. Okay, but the way that it's trading right now is so fast that I'm trying to do everything, and it's just so fast. So you just gotta listen to the words that I say. And I know, Barry, I don't know if you're in here right now. Nope, Barry's not. But I know that I say things and I say it really fast. And so you just got to listen. And if you can do it, do it. If you can't, don't. And what I mean by that is, if you're preoccupied by your job or whatever it is that you're doing, and you can't act fast enough to the words that I'm saying, then don't. Just wait. There's always going to be another trade. Always going to be another trade. Okay. Sorry, I dragged this on. But it was because I had a big day. I had a big day in gold, and I knew gold was going to be a lot to talk about. All right. So again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Jada just got home. Okay. Today is the 19th day of August 2020. We made 134 ticks in gold. So, and I still, even at 134 ticks, if I was solely trading and just watching gold and doing everything that I know how to do, I could have had 3,000 ticks in gold. And I'll teach you how to do that, but what you do and what I do, well, they're different things a lot of times. All right, so it took 33 minutes and 4 trades to get to $100 a contract, and we took a total of 15 trades. So on the month now, we're up $6,568. That's over 13 days, averaging $505 per contract per day. And I am now on my 128th consecutive day of getting my goal. And on the year, I'm at $59,879 per contract per 2-hour day. Now that's over 153 days, so we're averaging $391 per contract per 2-hour day. So, you got to put it all into perspective. If you multiply it by 10 or 20, 10 right now is really, the liquidity is still pretty low, especially in gold. The liquidity is still pretty low. You can only probably trade 5-6 contracts in gold. But 5-6 contracts times 134 ticks, that's a pretty good day. And those, it's just giving it up to you. There is so much opportunity right now. If you know how to do it, there is so much opportunity. And so, my job is to teach you how to do it. And I do that by doing it in front of you, and the one-on-one meetings, like Venus, you want to have one of those, I think, right? And Paul, you want to have one of those, I think. Learning how to do it is the beginning step. Like right now, we're going to have an up close. We got bullish separation. It's going to be a long trade. I don't have to draw the trend line. I can see it. I can put the trade on, and right now I'd be in profit. If I had 10 contracts on right now, I'd be up $400, $600, $800. And that's all in a couple of seconds. So I don't know why you're not trading if you're not. but okay. So with that said, let me do my normal routine. Hang on. Here we go. If you have not taken a free trial with us, go to the homepage at CFRN.net and click right here. It says free 5-day trial. Click on that. Or alternatively, you can go to EminiFuturesTrading.com and just follow the instructions. Okay? It's not difficult at all. All right, just follow the instructions, and you'll be sent everything you need to know to get into the live room in the morning. Okay? And, we do unlimited one-on-one training once you become a partner. When you're on the trial, we'll do one-on-one with you. But, once you become a partner, it's unlimited one-on-one. And I have one very shortly, as a matter of fact, that I have to do. So, all right. That's it. I'm going to pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Okay, let me grab the charts. Recap of the recap.
Today, oddly, it took 33 minutes and 4 trades to get to $100 per contract.
Good job.
Thank you.
Okay, guys, what you see in the morning, you see everything that happens, okay? We're transparent with everything we do around the clock. Michael is putting on and taking off trades while he's teaching and training you, and that's where you should be asking lots of questions. If he's in a trade, it's okay, just type it in the box, and when he's finished with that trade and waiting on the next setup, he'll answer your question. Now, everything that we do outside of the room is also transparent. Whether it's a Concierge Trade Alert or a Logic 247 alert, you have that information ahead of time before it actually triggers. It's not about, posting some historic charts and doing the whole woulda, coulda, shoulda kind of thing. No. You get the heads up long before the trade triggers. Minimum, probably, in most cases, you have about 15 minutes to get to from wherever you are. When your phone sounds, or your computer, you got, in most cases, a minimum of 15 minutes to get to the chart, get your trading hat on, and sit down and start putting on and taking off trades. Now, because the Logic channel is open around the clock, from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern, you may not want your phone going off at 2 a.m. in the morning. So you just turn off notifications. The notifications will continue to stack up in the channel so that when you are ready to trade again and you turn notifications back on, you'll have who knows how many alerts sitting there waiting to be traded. Some will have already triggered. Well, the good news is that most alerts will trigger multiple times. Some days it's twice, some days 3 times, 4 times, 5 times, even more. That's one alert, multiple triggers. Now the difference between the two alerts, the Logic 247, that's delivered live in real time as opportunity presents itself. It could be 2 a.m. or 2 p.m. The Concierge Trade Alerts, those are based on historic price action. So you got current, you got historic. Those come as a static report shortly after the Globex open each evening. So in just a moment, I'm going to give you a chance to take a screenshot of these, and then we're going to walk through them one by one. The Logic 247, I just got the updated recap. Thank you very much for that, Valerie. I'll drag that up to the screen right now. So stand by. Okay, we're in week 107. The final recap for last week, which was week 106. Last week we issued a total of 93 alerts. Out of those 93 issued alerts, we had 67 that actually triggered, or they were actionable. Out of the 67 actionable alerts, 8 of those were stopped out. Now that's 12% of actionable alerts stopped out. That's not a typical number though. What we've averaged over the last 107 weeks is 20% of Logic 247 alerts do get stopped out. So this was a better than average week. Okay, that was final recap, week 106. Now, Sunday night is when we open. So when I did the recap on the show Monday, from 6 p.m. Sunday night to 12 noon on Monday, we had issued 20 alerts, 9 of them actionable, 2 had been stopped out, so that was 22%. So that's more than the average. And then the recap yesterday that I wasn't here for, which I got at 11:45 a.m. yesterday, we had gone up to 49 total alerts, 34 actionable, 5 had been stopped out, so that's 15% of actionable alerts. So we went from 22% stopped out on Monday, 22% stopped out on Monday, to Tuesday, 15% stopped out. Now here we are today, Wednesday, as of 11:45 a.m. since Sunday night at 6 p.m. Eastern, the Logic 247 channel has published 63 alerts. 38 of those actionable. 15 never triggered. We are still, hang on guys, let me answer this real quick.
Didn't mean to interrupt you.
No, that's okay. I should have just said yes, please, and thanks. Okay. All right. So week 107, 63 alerts since Sunday night at 6 p.m., and we're just halfway through the week. 15 never triggered. Still waiting on the results of 10. So we've had 38 actionable alerts so far this week, of which 6 have been stopped out. So we're at 16% of actionable alerts stopped out via Logic 247. Now, the stop out is based on not risking more than $300 per contract per trade, less when possible. I teach all of our traders a 3-step methodology where instead of using a formula or a ratio or a percentage of the ATR, we actually let the chart tell us where the stop loss needs to go. It's based on market structure. It's a really simple concept, very elementary, if you will. When you and I do one 45-minute mentoring session together, once you become a passport holder, in that 145-minute session, I will teach you how to use market structure. So going forward in your trading life, every time you're looking to put on a trade, long or short, you'll know how to go to the chart and let the chart tell you where that stop loss needs to go. Understanding market structure is one of the most powerful tools you'll have in your trading toolbox. Okay, so here's where we stand. All right, now real quick while we're showing stuff, let me show you last night's Concierge Alerts. You can do a screenshot if you'd like. Okay, last night I didn't get them out until 9 p.m. last night. I had life happened a couple times yesterday for me, so I was running a little behind schedule. We cover each night, and we have for years, many years, the S&P, the Dow, the Russell, Crude. We're in the V contract, by the way. NQ. We recently added the 10-year notes. We're now in the Z contract on December. We have been for a while. Canadian dollar, the euro, British pound, silver. Okay. Now, in Telegram. Oh, and I posted this in the discussion group earlier. If you've become a member or if you're on a trial, make sure you have access to the discussion group. This is where you get to mix and mingle with our students, our traders, some who've been with us for years, some of them who have, are relatively new and are just starting to learn the strategy. You'll make some great friendships there. I posted this chart earlier as price was reaching up in the pre-market strategy session. I said, guys, the trade I see here, we've got another trade up above this zone if we get through the high, the all-time high. But when I snapped this shot, it was 33.94 to 33.96. Now this little tool, it's built into Windows 10. Okay, so all you got to do, put the chart up. Yeah. Now go back to my snipping tool. Okay. Just click New, and then hold down the left mouse button, drag it across whatever it is you want to take a screenshot of, release the left mouse button. Now you've got an image that you can do a few things with. You can right click it and send it out as an email. You can copy it to the clipboard so that you can paste it into Telegram so that you can ask a question and go, hey, I've got a question about this trade or about this setup or about this chart or about this indicator. It makes it real easy to answer your questions that way when you can provide a screenshot. You can also save it as an image file, a GIF or JPEG or whatever. vote. Okay, so it's really simple. In under 1 minute, if you've got a question, you can grab that screenshot, bada boom, bada bing, send it in Telegram. You can send a private message to myself, Michael, or Valerie. But if it's not something quote unquote private, then I encourage you to just post it in the discussion group. Not only will you get my answer, but you'll get the feedback from some of our other traders who've been trading our very simple methodology and strategy for quite some time. Okay, daily chart, S&P 500 E-mini Futures, all-time historic high, 33.9650. This morning, Tim asked me in the pre-market strategy session if I had used the Fibonacci extension tool to generate potential overhead targets once we get through the all-time historic high. And so I did it during the session. We took the tool and went from this swing low to this swing high to this swing low. We are just above the 62% Fibonacci price extension, the 61.8, we call it the 62. Then you've got the all-time historic high at 96.50. That's based on the price of the current contract. And then a 100% price extension would put the market up at 35.02. Now, what typically happens is whenever the S&P 500 puts in a new all-time historic high, it usually fails pretty quickly. My thoughts are we tag it, okay, and a lot of folks are going to want to lock in their profits, so we're going to see a pullback, a shallow pullback based on just the last leg up, okay. In fact, I'm going to clean this chart up. Let's do this and this, and all these areas of support. We'll put them back on the chart when the time is appropriate. Just going to clean this up real good. All right. So, if we use just the last leg, and this is the Fibonacci retracement tool, just the last leg up, okay, the shallowest Fibonacci retracement of just the last leg up, 32.96, which is just below where the daily BBC is right now. So, in order for that to happen, we would need to get below the step line, okay. Once we get below the step line, on the way down, we've got this little area here. There should be some support, a bounce. And then as we get into this area, support and a bounce. But where the market will be trying to get to is this shallowest Fibonacci retracement and the BBC. Now, hitting either one of those should be good for a really nice bounce. Once that bouncing is over, if we get back below the BBC and back below the 24% fib, then the next stop is down here at 38. Here's the 50% fib retracement, and there's the 62. Okay, let me shrink this whole thing up for a minute so you can get the whole picture. Okay, back in January, the market put in an all-time historic high right here. And what did it do? It failed. It's just what it's done historically. Could this time be different? Absolutely. But until proven otherwise, that's what we're going to anticipate. Price got back above the BBC. Whenever price is above the BBC, that green line you see, that just stands for bull-bear cross. When price crosses above it, we're bullish, looking for higher prices. When price crosses below it, we're bearish, looking for lower prices. So this was a Sunday night, gap lower open, and it was the beginning of the pandemic crash. It took us all the way down to 2165 on March 23rd. And that's where buyers came in, drove us up to the BBC. When we approach from below, we expect resistance. Just like when we approach from above, we expect support. So we had a leg, a retracement to blue and climbing. Okay, the official term is CFMA1. I just use red and falling, blue and climbing. Red and falling represents bearishness or resistance, while blue and climbing represents support or bullishness. So as price pulled back to blue and climbing, it found support, it got us above the BBC. Hence began in earnest the pandemic recovery. Leg and a retracement, leg and a retracement, leg and a retracement, then the big leg, okay? And we ran into resistance right where we expected. Why? Well, after this all-time historic high, price retraced to the BBC. It put in a low here. That low was broken, but then as price came back to that low, what was once support became resistance. You probably heard things like the ceiling becomes the floor. It's a real thing, okay? Not everything in Technical Analysis 101 always bears good fruit, but this is one you can take to the bank. When price finds resistance and can't go any higher, it turns around and goes to look for support, which it found. See this swing high, this swing high, this swing high, resistance, 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 bing, support. Now, I said that red and falling represents resistance or bearishness. So we tried to get through red and falling 1 day, 2 day, 3 day, 4, 5 days, 6 day, 7 day, and price was finally pushed back below the BBC, where it found support right at these lows, which got us back above the BBC, took us back up to that area of resistance. We finally got through that, and then we were expecting resistance at the bearish cross price. Why? Because that's how markets work. Whenever you see a bullish or bearish cross that leads to an extended move, when price revisits that area, you can expect it to be good resistance, and it was. It sent us all the way back down to the BBC. We then spent many sessions trying to overcome this, which we did. And we got up into this area, which is represented by the all-time historic high, which is 33.9650, based on the price of the current contract. Now, if I change this if I go to the continuous contract, you can use this chart for charting purposes, but you have to actually go to the futures contract to put on and take off trades. If we slide way back here to that all-time historic high, based on the continuous contract, we show an all-time historic high, swing high of 33.9250. Nope, let's make that 33.9750. It was on this candle right here. So futures 96.50, on the continuous contract 97.50. It's an area, okay? So we can't wait to see how it will behave once it gets here. Now this could become one of those sticky kind of areas where price just rolls sideways for a bit. Hopefully that won't be the case. Maybe we get a sharp spike and then the retracement, and then we'll have some nice short trades on the way back down to the BBC. Okay, now let me bring up these. You already had a chance to get a screenshot. So let's go to the charts and take a look at this compressed sideways action that we've had. As you can see here, we've had no real nice pullaways. I mean, we've had pullaways and pullbacks, and this is, there was a question earlier, how does the strategy work? Well, in a nutshell, bullish cross, price pulls away, price pulls back, leg. Price pulls back, leg. Price pulls back, another leg. Price pulls back, another leg. And right now we're pulled back to the BBC on the 30-minute chart. The next high probability move is to the upside. What we want to see price do is we want to see price, that was from this morning, we want to see price get above blue and climbing. We want to see it get above the step line. And then we'll have that exact same trade again, 33.94 up to 33.96. Okay. Now, let me see. Questions in the chat box. How about soybeans or any others that you trade? I used to include soybeans in the Concierge Trade Alerts every night, Paul, but we don't seem to have a lot of soybean traders. So I replaced soybeans with one of those other markets that I just showed you. However, our methodology and our strategy works beautifully with soybeans. And if you enjoy enjoy trading soybeans, book a session, talk to me about it. And if you're going to be around, we'll see about getting some numbers out there for you to help guide you. Okay, all right. Now, on the alert last night, the S&P Concierge Trade Alert by 33.92. Now, the alerts came out last night at 9 p.m. Eastern, so that's 2100 hours, which is going to be right here at this candle. 2100 hours. Okay. And the long trigger is 33.92. Now, this is a market that's exhibiting the characteristics of a market near a top. 33.92, the first trigger only made it up 3 ticks to 92.75. Then we got back below the trigger. These are those multiple triggers that you heard me talk about earlier. The next one, we get a swing high at 93.75. Price just doesn't have the momentum. Now, the way to handle the Concierge Trade Alerts is you go to your chart. When they come in each evening, put 2 lines in the sand, the long side, the short side. And remember, we trade every market exactly the same. A lot of folks tell you, well, you can't trade gold the same way you trade the S&P or soybeans because they have different personalities. I don't even argue the point about the different personalities. But what I do say is that all auction-style markets, and by auction-style market, I mean you've got buyers on the bid, sellers on the ask, prices channeling back and forth. For our strategy and for our indicators, if you go from the gold chart to the S&P chart, to the Russell chart, to the Crude chart, you don't change anything. No indicators, no rules to the strategy, nothing. Everything we do, fluid across all markets, all time frames. So the S&P just really could not get out of its way. Okay, here we made 93.5. That's why in the strategy session this morning, I knew we had to get above this noise, but it was such close quarters. That's why I didn't put it out as an official alert and just shared it with those who were in the strategy session. This last move showed the most promise. It took us up to 33.95.75. So that's 3 3/4 points. We've now gotten back below the trigger one more time. As we pull back to the BBC, we expect support. Over here, we pull back, support, pull back, support. This one we spiked. That was the London Open, 3 a.m. Eastern. But ultimately, the pullback held. Another leg to the upside. Pull back, another leg. Now here, starting at 8 a.m. this morning, we traded just a bit below the BBC. But no sooner did we get our bearish cross, then the market just turned right back up. The high of the session, 95.75. And we're about to trigger again at 33.92. And the trade to target is 33.96. Short side for the S&P last night was 33.79. So that would be the other line in the sand that you draw on your chart. Price will often walk right up to a Concierge Trade Alert, like a little prairie dog sticking his head up out of the hole, looking to see if the coast is clear. If he doesn't like what he sees, he ducks back down into the hole and, pops up somewhere else. And so the prairie dog kept popping up, never really liked what it saw. Liked what it saw for a minute, back below ground level, back below the trigger. Now we're waiting on that next trigger. So you've got a line here that you would have put on last night, and a line here. Everything in between those two lines is the market trying to make up its mind what it wants to do. As long as price is above the BBC, we know it's trying to get to the weekly zone overhead. When price is below the BBC, it tells us it's trying to get to the zone below. Now these zones are published every Monday morning at 6:15 a.m. Eastern. This is your fixed support and resistance areas for the entire week. We've published the zones since December 14th of 2009. When they come out Monday morning, you get them on your chart. We don't change them in any way the entire week. They're carved in stone. And you'll watch price over the course of the week. If we go back here to Sunday night, we've gone from zone to zone, up to the zone. Only three things happen at a zone. Either consolidation, that's the most likely, rejection, second most likely, the third and least likely is what we see right here. It's called the slice, and when price slices through a zone and runs out of steam, it will most often return to the zone that is sliced through. Now, on a typical move like this, we would continue in the direction of the slice. But that's not what happened. Price immediately got back above the zone, back above the BBC, and led us into this snarl. This is like congestion on the freeway here. Gridlock, bump and grind, bumper to bumper. So we'll keep an eye on the S&P. We'll go to the Dow. We had an alert in the channel, number 4951. We talked about that during the pre-market strategy session, so I didn't have to put that alert out because it was already in the channel. Now, the pre-market session starts every day. I shoot for 9 a.m. Eastern. That's 6 a.m. here on the West Coast. But most mornings I'm able to get it open by 9 a.m., 9:05. Okay? So if you can join for that, it helps you get an idea of what we expect from the market during the session, the Wall Street session. We trade around the clock. That pre-market is just getting you ready for the Wall Street open. And we identify what areas overhead will be potential resistance, what numbers below will be potential support. Okay? So here we spent an entire day from 12:30 yesterday till 9:30 this morning, Wall Street open, just consolidating, right? When you see price above the BBC and then below, and then above and then below, and then above and then below, that's not good trading. Those are not the kind of moves that you're looking for. That's right there. Maybe you've had 2 good days in a row, or 2 weeks, or 2 months. You're feeling pretty good about things. And then you attempt to trade this. And in a matter of hours, sometimes it seems it's all gone. All the hard work out the window. Don't let that happen to you. Not only do our indicators help you find high probability, low risk trade setups, they'll keep you out of this. Okay? So the alert last night for the Dow, consider being long, 27,825. And that's right here. $27,825. Okay. So we had a swing high at 27,855. So the alert was 825, the swing high was 855. That's 30 points. The Dow pays $5 a point. So that's $150 per contract traded. Now, once you earn the right to trade 10 contracts, that would be a $1,500 move. But don't put the cart before the horse. That's awkward for the cart and the horse, okay? When you become a CFRN member, a passport holder, you'll be given the 2420 blueprint, which is designed to help you go from 1 to 20 contracts over a period of 24 months. You start out in SIM. No matter what new methodology or strategy or indicators that you're attempting to use, a trader will always trade in SIM until they prove to themselves that they can actually be consistently profitable with this strategy or with these indicators. Now, if you've been trading live for a while, sometimes it just almost feels demeaning to go back into the simulator. I assure you it's not. It's a smart business decision. Throwing real money at the market using a strategy or indicators that you're not really familiar with, boy, that just never ends well, okay? So resist the urge. The first requirement of the blueprint is that you put together 10 consecutive days in a row in the simulator where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with one contract. Once you go live, now the goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will tell you that it is time to add contract number 2. The beautiful thing about contract number 2, you're adding that with profit you earned in the market. That's what it looks like when you're building a successful, profitable trading business. Okay? 10 days in SIM, consecutive, get your goal. Go live with one contract. Increase the account balance by $2,000. Those profits that you earned in the market, those are going to be used to underwrite adding the second contract. When the blueprint tells you it's time to add contract number 3, same thing. You're adding it with profit earned in the market. Number 4, number 5, number 10. You're always adding the next contract. You're always increasing your trading size by one contract at a time. And it has to be done with profit you earned in the market. Otherwise, if you veer off of that path, then you very well may just end up blowing up another account like you have in the past. The whole point of this is so that you don't do that anymore. Our goal is to teach you how to find these trade setups yourself. Michael works very hard, 2 hours every morning, showing you the trade setup over and over and over. He uses a range chart, which is fast, because he wants to be able to show you as many triggers as possible during the 2-hour session. The alerts, on the other hand, are based off a larger time frame, the 30-minute chart. Okay? So, while we're teaching you how to trade our strategy, how to find these setups on your own, we're also handing you trade alerts, one after another, after another, after another. It's one thing to learn from videos, it's one thing to learn from historic charts or from a book, but when you actually have live, real trades that you can take action on, that you can trade in the simulator, you see the alert come out in the channel, you get ready, it triggers, you manage, you get to your target. So far this week, with 38 actionable alerts, 6 being stopped out, that's 32 individual opportunities to get your goal, plus for the day, for the week. Okay? All right. So we know what happened on the Dow on the long side. Now let's look at the short side. The short side for the Dow is 27675. So again, last night, you would just, when the CTAs are published, go put your line on the chart. 27675. Right there. The swing low was 68. So again, this is an expansion of this. Dow walks right up to the line, takes a look around and says, no thanks, heads the other way. Came out of the hole here just enough to put a few dollars on the board, but then right back into the safety, right back into this weekly trading zone that we're consolidating at. Price tried all day yesterday to get through that zone, and over and over and over again, finally broke through. But now we've got a high followed by a lower high, potentially the beginning of a downtrend. Okay, so price is pulled back, consolidating here at the zone. Now, when price pulls back to the BBC, we expect that to be good support. When price pulls back to a weekly trading zone, we expect that to be good support. If price fails here, then you've got potential support here, potential support here. But if price is trading below the BBC, then that means we're no longer trying to get to the zone overhead, we're trying to get to the zone below. This consolidation, we could roll sideways here right into that Fed minutes that we're expecting this afternoon, the FOMC minutes. Okay, so that's the story on the Dow, on the Russell. Last night's alert to be long 1581, which is right here. Now 1581. 1581. Okay. 1581. Now we record this program every day, and you'll find the archives at youtube.com/CFRN. Scroll back a day, scroll back a week, scroll back a month, scroll back a year. You'll see us doing and saying the same thing every day. We haven't changed a line in our code or a rule to our trade setups in over 8 years. If it's not broke, don't fix it. When we're trapped in a sideways market like this, the results are not that fantastic. But because we're transparent in everything that we do, we come before you each day, the good, the bad, even the really ugly. We don't sweep that under the carpet, because that's the truth about trading. Getting stopped out is as much a part of trading as breathing is a part of life. Unfortunately, there's so many websites out there that try to convince you that they somehow miraculously have cracked the code, and if you come hang with them, you don't have to worry about being stopped out anymore because they know what's going to happen next. Well, the truth is they don't. Nor do we. And we don't profess to. What we do know is what the next high probability move is in every market in every time frame. And it's not magic, it's not voodoo. It's very simple. Price right here just got back below the trigger. The next high probability move is right back up to that weekly zone. 1581 to 1585, that's 4 points at $50 a point. That's going to be another $200 per contract traded. Now, again, by the time You've earned the right to trade 10 contracts. That's a $2,000 move. Worst thing you could possibly do to yourself is to reason that, well, you know what, I got enough money in my account. I'm sure ordinary people need to do that whole simulator, then the 1 and then the 2, but I'm clever. I'm a captain of industry. I'm just going to trade 10. I can handle it. If I've known one, I've known 1,000 traders who tried that approach, and it never ended well once. Not even once. From a statistical standpoint, that's got to tell you something. Now, if a simple move like this could someday be worth $2,000 to you because you've earned the right to trade 10 contracts, isn't that worth waiting for? Isn't that worth going through the process? Because the process does work. But the question is do you have the self-control, the self-discipline to stay with the steps in the blueprint as they're laid out for you? Some traders can. Some traders really struggle with that. Okay? So that was the long side for the Russell. The short side, 1566, which I don't think we made it to yet. But should the market reverse off of this announcement this afternoon, then that is the trigger to the downside. Okay? All right. Let's go to the NQ. Okay. Now, we had an alert this morning already in the channel, number 4949, which we check and see if that has triggered as of yet. Let me find it. But that must be the wrong channel. Hang on. Where'd my stuff go? Hang on. Wow, there it is. 4949. Now, when it says alert number 4949, that means number 4,949. That one was marked this morning as a no trigger. Okay. The actual trigger on that one is up at 11,444. So I will issue another alert, which will take us from 11,444 up to 11,454. And here, let me just put that on the screen for you. 11,444 to 11,454. That's a $200 per contract trade. If price goes from 44 up to where I anticipate resistance at 54. Okay? And this one was coded as a, when you see the Z's, that just means it didn't trigger. We give them a certain amount of time to trigger, and if they don't trigger, then we just mark them as no trigger and move on. Publish a new alert. Okay? All right. So back to the CTAs. CTA last night for the NQ was to be long 11445. That's 1 point above that. Okay? Now, as I explained at the beginning of the show, the concierge alerts are based on historic price action. Logic alerts are based on current price action. So when you have these two different methods, both pointing at the same important price, important area, that's where you'll typically find your highest probability, lowest risk trade setups. Some traders only trade those because they truly want the highest probability, lowest risk. So if historic price action is saying this is a good entry, and current price action is saying this is a good entry, that's the entry I want. And I'm going to use market structure to set my stop loss because I'd much rather get my information from the chart than from some guy on the internet or one of the talking heads on TV. Okay, so the Concierge Trade Alert on the long side for the NQ has not triggered as of yet, and the short side is 11351. Oh, I forgot to mention this Monday for all of you Yellowstone TV fans. Was that a great episode? It's pretty brutal, but wasn't that a great episode Sunday night? If you haven't watched that show with Kevin Costner, go find one of the streaming services where you can start with Season 1, Episode 1. It's really a good show. Okay, 11,351 down to 32.50. So that's almost 20 points. We'll call it 19. At $20 a point, that's $380 per contract traded. Okay. Now we'll go to crude. We are in the V contract. Last night's alert for crude was to be long 43.05. Which is right about here. $43.05. Swing high was $43.21. So that's $160 per contract traded. And we're getting ready to trigger again. Remember, important prices, important areas are almost always tested. Okay. Short side for crude, should you need that later in the day. Oh, it did trigger 42.60, only took us down to 42.55. It's $50 per contract. Now again, on the good days, the bad days, and the ugly days, we show you exactly what happened. So when you go to the YouTube channel, youtube.com/CFRN, you'll see us doing and using the same words and all of that stuff every day for years. But you'll also see what a difference there can be from one day to the next. When markets are like this, we don't expect a whole lot. Okay, but we trade what's in front of us. And then we have days where there's beautiful trending markets, and you'll be astounded at some of the numbers and the way they stack up. But you have to take that initiative. You have to go there. Now, when you scroll back a week, a month, a year, you don't need to watch the whole 2-hour show. Just fast forward up to the part where Michael does the recap of the room. And then right after that, I come on and do the recap of the concierge and the logic alerts. You watch a few of those, and you'll really start to get the swing. And make sure you scroll back to days where we didn't have this kind of compressed movement, but we had actually, trending markets. And it all goes back to this battle at the top. Okay. All right. So we've covered S&P, Dow, Russell, NQ, crude, and now we go to gold. The big mover. All right. Last night's alert on gold was to be long 2021. Okay. And we never saw that. This was previous day. So 2021. And the reason that zone is in yellow is because it was a previous weekly zone. So last night, CTA 2021 on the long side. On the short side, 1999, which is right here. Okay. So from 1999 down to the zone below at 96, 97, that's a $200 per contract move. Okay. We hit the area that we expected to be good support. Why? Because we look left. See, swing low. Swing. If you just follow the horizontal line on my cursor, you'll see swing low, swing low, swing low, swing low, swing low, right? So we have one trigger, okay, and this trigger actually took us down to, now this first trigger took us to 1992, okay? So from 96, or 99, down to 92. That's $700 per contract traded. Then price got back above the trigger, okay? Came down again. This time it traded all the way down to 1988. So from 99 to 88, that's $1,100 per contract traded. Price then gets back above the trigger. Now, when price rises to the BBC, we expect it to be good resistance, and it was. Just like over here, the pullback was support. The pullback was support. Once we get below the BBC, then the pullbacks become resistance, okay? So we triggered again, and that took us back down once again to 88. So that's another $1,100 per contract trade. Price gets back above the trigger one more time, and this time from 1999, we dropped all the way to 60. So that's a $3,900 per contract move. If you're a 10 contract trader, it's a $39,000 move. That happened today, okay? Now, it started at the open, 9:30 Eastern. Here's the 10 a.m. candle. Here's the 10:30 to 11 a.m. candle. And once we hit this weekly zone at 1970/71, we've been consolidating now for working on 3 hours of consolidation. So what's the next high probability move from here? Well, because price has gotten on the right side, okay, of red and falling, buyers come in, they bid this thing up to the BBC if they can. When we get there, we expect that to be good resistance to proven otherwise. And then that sends us back to the zone, okay? Now, here it is Wednesday, and you can see that price is still clearly respecting the weekly zones that were published Monday morning at 6:15 Eastern. Okay. See how we consolidated for many hours here at the zone, and every time we tried to make a move higher, BBC acted as good resistance. Consolidate, another try, pushes us down. We take out these lows, we even take out this low, and then we had a logic alert to take care of this move here to the downside. Now, does price have to pull back to the BBC? Because it takes financial commitment for prices to rise. For prices to fall, all that has to happen is buyers stop buying. As long as buyers keep their gas on the foot feed, as they used to call it back home, will rally until they run out of steam, okay? And that most likely right here. If we fail here, the next zone below us is 54.55. Okay, we got a zone at 70.71. We spiked it, pulled back. See, we haven't broken away from the magnetic attraction, if you will, for lack of a better term, that zone represents. So we may not get the pullback. I would not, well, it would be a counter trend trade. We don't publish counter trend trades in the alert channel. Okay? They just don't have the same degree of high probability that a trend trade does. And because we have so many markets to choose from and so many opportunities to choose from, why not just go with the one that represents the highest probability, lowest risk profile. Everything that I'm talking about, everything that we do is based on logic. There's no secrets, there's no mystery. We're transparent with everything we do. I teach you how to find these trade setups. Michael teaches you in the morning on the range chart how to spot the setup. Okay, we use the same primary setup on every market, and not only will you be able to use that strategy on every market, if you fancy yourself a 5-minute trader, that'll work just fine. Maybe you use a daily chart. Maybe use the hourly. Maybe you use an 89 tick chart because it's a fib number. Doesn't matter. Price will always revert to the mean. And because you have the indicators on a chart with the weekly trading zones, you'll always know what price is trying to do at any given time. Up here, when price got below the BBC, we had our bearish cross. Well, we know that price is trying to get to the zone below. Price is always trying to get to a zone. From the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon at 5 p.m. Eastern, the market price is on a mission, right? And you can always tell what the current mission is. Once we got above this weekly zone, see how we consolidated first, made that pull back to the BBC. This time we get above the zone, and then we hold the zone on the pullback. Well, then we know that price is trying to get to the zone overhead, because when price is above the BBC, we anticipate higher prices. Right here, you can see a beautiful zone to zone move. That was from 1971 to 1996. That right? Yep. 96, 71. It's a $2,500 per contract move right there from zone to zone. Price finally got through, made it to that area overhead, that zone from last week, which we have talked about, served as good resistance. So from 97 to 2020, that's a $2,400 per contract move. Back to the zone. Well, when we dropped yesterday, the zone caught us, sent us right back up, back to the zone, consolidation, and then from just like we went from zone to zone here, we just went from zone to zone here. People say all the time, well, couldn't I just trade the zone to zone with the indicators? Yeah, you actually can. You can use the alerts for guidance, okay? Or you can put it all together in a nice little package with a bow on top. All right, so we know what happened with gold. Silver. Silver, last night's alert was, consider being long, 28.34. We've not seen that yet. Short side, 27.58. And 27.58. Now the alerts came out here. Over here. Right? Yeah. And so 27.58. Let's find it. Okay. 27.58. Now, we triggered and we dropped 47. So from 58 to 47, let's call it 10 cents, a dime. Let me explain how silver works. If the price of silver moves $1, that's worth $5,000 on one futures contract. A $1 move in the price of silver, not spot silver, but a futures contract. It's worth $5,000. And so if price just moved a dime right there, that's $500. Okay. Then price gets back above the trigger, triggers again, and what do we drop to? 27.24. 27. Hang on one second, Mike, and I'll get to your question. Let's see. The short on silver was 58, and then we dropped to 24. 58 minus 24. All right. That's 34 ticks, or 34 cents. Okay. Now, half of that is 17. So that's a $1,700 per contract move right there. So we have 1 trigger, 2 trigger, 3 trigger, 4 trigger, 5. 5 triggers, 1 alert. Okay. Now, look at all these wicks here. Look over here. Look over here. If you follow the horizontal line on my cursor, it's pretty obvious where support is. Just starting there. Just look right. There. 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 Now, we have an alert in the channel which will address this window of opportunity down here. Okay. All right. Now, let me go to your question, Mike. Oh, Bruce, I see your comment on gold. Let's go back to that for a minute. Let me see. Maybe you're calling this the head, this the shoulder, and this the shoulder. Okay. Which I guess would put a neckline down at about 1985. Tell me if that's what you're seeing. And then your question might be, how about gold daily hitting the BBC? Well, we can take a look at that. So Bruce said, yes, that is the one. So guys, here's the head, shoulder, shoulder, neckline. Now, in technical analysis 101, when you have a head and shoulders pattern, and maybe I can help you see it a little better. Head. Now these are sort of Picasso type head and shoulders, okay? So you got to squint and turn your head sideways. Head, left shoulder, right shoulder, and a really clearly defined neckline right there. Okay. Now, when that neckline is broken, as it was on this candle, what you're supposed to do is you go to the top of the head and you draw a straight line all the way down to the neckline. Okay? Now, grab that line that you just drew, bring it down, position it right at the neckline, and what they call a measured move brings us down to 1947 and a half, basically. I think you had a different number, Bruce. You had a 1959 target, so you may have been measuring yours a little differently than mine. You might have put your neckline here. I don't know. But I do see what you're talking about. If you have any more questions or comments, just put them in the chat box there and we'll address them. Okay? All right. So we've covered S&P Dow, Russell, NQ, crude, gold, silver. Now, at the beginning of the show, we talked about the next high probability move. We pull back to the BBC. We expect it to be good support. We've triggered again. Okay? And that triggers 33.92. So far, we've hit 93 and a quarter. Our trade 2 target is the weekly zone overhead. On an alert, the final trade 2 target on a long is always the zone overhead. On a short, it's the zone below. So no more guessing. You're no longer left wondering, what should I do? Should I do anything? Should I be long? Should I be short? The strategy combined with the indicators tells you exactly what the next high probability move is. Now, does that next high probability move always come to fruition? No. If it were that easy, I suppose everybody would be a trader, right? No. You learn to discern whether that high probability, low risk move stands the test of what you understand about how markets work. Okay? Now, this trigger here at 92 would have required a stop loss at about 89. So 3 points of risk for a trade that will potentially take us from 92 to 96. Okay? Now, we don't ever want to risk more than $300 per contract per trade. Now, this is a 3-point stop loss, so at $50 a point, that's $150, right? Okay, we don't want to risk more than $300 per contract, but we also want to risk less when the chart tells us it's okay. And again, once you become a passport holder, you and I'll spend time together. I'll teach you our 3-step methodology for determining the proper stop loss, and then you'll never have to wonder again. You'll be able to read the chart and let the chart tell you where the stop needs to be. Okay? All right, let me see what just came through here on Telegram. Venus, if you're on the trial, you would find those in the alert channel. Check with Valerie. Support at CFRN.net. Or you can call her at 949-423-6464. You have to be on the trial, or you have to be a passport holder to access the alert channel. Okay? So check with her, get that squared away. Now let's jump back to the logic for a minute. So nice when your phone tells you that there's a spam risk if you answer the phone call. That's very clever. Okay. So we're going to take a look now. I already gave you the results for the week so far. We're in week 107. At 11:45 a.m. today, we had issued 63 alerts, 38 actionable, 6 had been stopped out. 16% of actionable alerts have been stopped out. Okay? Now, this is what it looked like Sunday night when we got started. Last week's results, I already covered those with you. We had 93 total alerts, 67 actionable, 8 were stopped out. So that was 12% of actionable alerts stopped out for the entire week last week. That was a better than average number. We averaged 20%. So this week, week 107, now the time you see here, that's Pacific time, because I'm on Pacific time. Arizona doesn't do daylight savings time. The very first alert we put out Sunday night was to be long gold at 1961. Initial target 63. Next target 64. Next target 68. And the swing high of that move, now we have moved higher since then, but Sunday night the swing high was 1968.5. Okay, so that's a $750 per contract move. Then crude, we had a stop out. On the Dow, the entry was 27,880. We ran up to 928. Okay, so that's a 48-point move at $5 a point. It's about $225 roughly per contract traded. Russell stopped out. In Q, entry was 111.91, and we ran to 11.208. So that's $340 per contract traded. Another stop out. It was a rough Sunday night. I think we were at 22% stopped out on Monday morning when we did the show. S&P, the entry was 72, target was 74, and the swing high was 75.50. So that was a 3.5 point move at $50 a point per contract traded. Okay. This is a no trigger, British pound, euro. Now again, when you are a passport holder or on a trial, you have access to all of this data, not just historically, not after the fact, but live in real time as it's coming out. Okay. There's no mysteries, there's no secrets. This is a big glass house. You see every move we make around the clock. S&P, that was the Dow. In Q, went from 45 to 76. That's basically 30 points at $20 a point, $600 per contract traded. No trigger on crude. Here's a gold. The entry was 2002. First initial target 2003. Next target 2005. We made it up to 2005.60. On the Dow, the entry was to sell 725, and we dropped past the first target. We dropped past the second target, and we came within, actually we hit the weekly zone at 27,650/655. So from 725 to 650, that's 75 points, $5 a point, $350 plus per contract traded. There's crude, no trigger, stop out on the S&P. On the Dow, long 865. The second target was 920. We made it to 904. We got past the first target. So that's from 65 to 85. That's 20 points. 40. It's basically a 60-point move. Yeah. At $5 a point, $300 per contract traded. Here's the NQ. Entry was 318, made it up to 335. So that's about $350 per contract traded. No trigger. Silver, long 27.58, and it ran up to 28.08. It exceeded the highest target. Now, from 58, we'll call it 60. So it's $2,400 per contract traded. $2,400 per contract traded, just one alert. And there may have been multiple triggers. We only tracked the first trigger here. Here's the Canadian dollar. Stop out on the Canadian dollar. Or, I'm sorry, no trigger. Here's a long on the S&P. The entry was 83. It ran up to 88. That's 5 points, $250 per contract traded. There's Russell, NQ, crude, stop out on gold, silver. Now we're rolling into yesterday, the 18th, Tuesday. There's the Dow. Now we had two-sided action on the Dow. We traded it long and short. Okay. The entry here was 860 and it made it up to 896. That's 30 points. Here the short side was 740 and it made it all the way down to 600. So that's 140 points at $5 a point. 140 times 5, that's $700 per contract traded. Just one alert. If all you did was showed up, traded this, and then went out and did life, marvelous day. $700 per contract traded. If you have the patience, if you have the discipline to take it step by step, and to be patient as you learn, you could be a 10 contract trader a year from now. If you try to cut into the, cutsies, if you try to jump to the head of the line and just trade a bunch of contracts because you have the money, because you can, that won't end well. But if you're patient and disciplined, take each step, one step at a time, it's very possible that you could be a 10 contract trader the right way a year from now. So that $700 move could be $7,000. Oh, how I wish I could promise you trading success, like all the other websites do. But I can't, because it wouldn't be true. Not because I have any doubts or questions about our methodology, our strategy, or our indicators, or our ability to teach those things, nor do I doubt our ability to provide you with round-the-clock client support. The only thing I don't know is what you're going to do with the information, with the knowledge, with the tools. Are you going to use the rules and the tools in the manner in which they were created to be used? Are you going to follow all the steps in the blueprint? See, I can't answer that question. I can only speak for the part that we do, but we will do everything that we can to encourage you and help you follow all the steps as they're laid out so that you can hopefully find the trading success that may have eluded you for, sometimes we have people come through that they've been at this 10 years. They've spent sometimes $100,000 on gurus and indicators and all kinds of things. Good people, decent people, hard-working people, not even people looking for get rich quick. People that really wanted to hunker down and learn how to trade. The only problem is they couldn't find anybody that would teach them how to trade. I mean, you can always find somebody that lets you come into their chat room where they grumpily call out alerts, or they send you a series of, DVDs or videos or maybe a book or a PDF. That is not the same as having a teacher. Someone who meets with you daily in a group setting, and someone who meets with you as often as you need in a private one-on-one setting. Honestly, there's just not anyone else that does that. There are places that promise it, but according to a lot of our students, when they joined and they tried to access that one-on-one mentoring, it somehow just never really materialized. Now that's a horrible thing. So, unfortunately, what happens is new traders, when they start searching around on the internet, looking for a way to learn how to trade, if you knew nothing about trading, if you knew nothing about the industry, and one website said, come over here with us, you'll never get stopped out again, pretty soon you'll be making thousands a day. Then you got another website that says, hey, this is a job. You're going to have to learn, which means you're going to have to work. You're going to have to apply yourself. It's not going to happen overnight. It's going to take time. You're going to have to learn to manage the risk. And if things go well, if you do all the things that are asked of you, there is a high probability that you actually can become a consistently profitable trader. But it's not easy. I'm telling you up front, 9 out of 10 new traders fail. Now, which website would you sign up on? The one that told you you'd be, pretty well off by this time next week? Or the guy that had nothing but like dark clouds, also known as the truth? Now, again, you're a person who has no experience with trading, no experience of all the games that are played out there. Who are you going to choose? I know who I would choose. I would choose a guy that said, I'll be well off by next week, this time next week, right? And if it turned out he lied to me, well, I'd just go Google again and find another one that promised me that luxury lifestyle. Well, how's that working? It didn't work well for me, I'll tell you that. Let me say it again, trading's not easy, but it can be simple. And our methodology, our strategy is incredibly simple. Sometimes people come along who have spent 10 years and have spent $100,000 and have bought all this complicated stuff, algorithms. They've flown to other parts of the country to spend time with people, to sit in on these classes or these seminars, and they still don't know how to be consistently profitable. But they take a look at our method and they go, come on, man, that's too simple. There's no way that works. Okay, I don't even like that term, works. Well, at that point, I don't know what to say. Here's years of results. Here's 4,000, what are we up to? There's 4,963 real-time alerts, of which 20% have been stopped out over the past 107 weeks. So, you can believe the pie in the sky, or you can face the reality. Hopefully no one in this audience will ever have to blow up another account again. Okay? Now, just because you come and ask us to teach you, well, I'm not going to insult your intelligence and tell you that there's no way you'll ever blow up another account, because again, I don't know what you're going to do. If you follow what we tell you, it's going to be real difficult to blow up another account because you're going to have to break a lot of rules. But if you listen and if you apply yourself, it actually can be a reality. If 9 out of 10 new traders fail, then that means there must be 1 out of 10 that succeeds, right? Go find that one successful trader and ask them, did you have a teacher? Their answer is going to be, of course I did. How else would I learn? See, that's how some people think, but how most people think, 90%, whoa, man, this looks great. I'm going to make a killing. Fund an account and just start throwing money at the market. What a rude awakening, right? Because we see it, it looks simple, so we dive in head first. But there's another kind of person who looks at it, vets it, sees the opportunity, and their first thought is, wow, I got to find somebody who can teach me how to do this. See the difference in the two different trains of thought? Now, if you were like the first guy, which was me as well, who saw it and saw the opportunity, but just figured I could just dive in and make a killing at it, if you're that person, if you've made that mistake, if you've blown up a few accounts, it's not too late to change your way of thinking. You wouldn't dream of getting into an airplane and trying to fly somewhere unless someone had taught you how to fly. You wouldn't attempt brain surgery on your best friend unless, you'd been to medical school and somebody taught you how to do brain surgery. But yet, otherwise, completely rational people dive into the market every day and start throwing money at it, providing liquidity for those who actually know how to trade. So, you can be the 1 out of 10, or you can be the 9 out of 10. 9 out of 10 will be the 9 out of 10. Only you can decide what's right for you. As a passport holder, we really do give you everything you need. There's group training in the room every day for 2 hours, Monday through Friday. Private mentoring whenever you need it. You get our proprietary methodology, our Emini indicators, and around-the-clock support. You also get the weekly trading zones, get those Concierge Trade Alerts every night, get the Logic 247 alerts around the clock. Everything a trader needs, all under one roof. You become a passport holder, you won't ever have to spend any money on markets again, unless you decide you want to do something different. Because what we do is not going to change. Because what we do is based upon the basic principle upon which the markets operate. It's not going to change. Fast days, slow days, up days, down days. We're just grunts. We show up, we grind out the widgets, call it a day. Boring. If you're looking for adventure in your life, go jump out of an airplane or something. You know, learn how to be a skydiver. Get your yayas on the weekend. Coming to work every day, looking for excitement, that doesn't end well. You want this to become boring. You want to come in, get your goal for the day, and go do life the way God intended. Fed in 5 minutes. Oh, that already happened. Feds, thank you very much, Tim, for the heads up. Sorry I didn't see it. Fed, stronger consumer spending, rebound. Let's take a look. How has it affected the markets? Oh, apparently not so much. Look at this. All right, I'm pretty sure there's an alert in the channel. If not, consider being short. 33.85 down to 33.83. See this bullish cross? That represents support. Okay, 33.85 to 33.83. I think it's already in the channel. If we trade 33.80, then we're going to end up with a down session on our hands. But we're only 8 minutes in. Now, remember, in 30 minutes, he's going to do a Q&A session. So while we've had some initial pretty good movement, there's more to come. So climb up in the bleachers, get a bag of popcorn, watch the action down on the field, and once Jerome is finished with the Q&A session, and the markets get back to their natural, normal rhythm, and you know what? When all this is said and done, that's exactly what will happen. No matter how high we spike or how low, when all is said and done, price will go right back to doing whatever it was doing before the Fed announcement. Okay? All right, so let's jump to our good word for the day. Now, if you want to get started with us, you need to go to Emini Futures Trading.com. Let me show you. And we're going to wrap this up for today, because I want to actually listen to that press conference. There's the first $2 trillion company in the world. Emini Futures Trading.com. This is where you go. It's all you need. If you want to start trading with confidence, not fear, click the button. Start now. Become a CFRN passport holder today. Emini Futures Trading.com. All right. Our good word for today, and then we're out of here. So if you have a question. Oh, I see there is a question there, Brad. Let me get to that question before we do our good word for the day. And today we're going to be talking some more about overcoming rejection. But the question from Brad, Dwayne, if you get up to 3 contracts and have a setback, how would you decide you need to cut back to 2 contracts? Brad, what I would suggest is book a mentoring session and let myself or Michael walk through the trade setups that led to the setback. Or if you don't have time for that, send me a series of screenshots in Telegram. You can just send it privately to me understand what happened, and then we can discuss what's best. If it's a major setback, I would, you can just scale back to one contract, but it's a really big setback. Just go back to SIM until you and I can get together for 15, 20 minutes, or as long as it takes to kind of get a handle on things, what happened, and then I can maybe better, I could better help you that way, I think. Now, if the times I have listed on the website don't fit your schedule for booking a session, if you'll just call Valerie at 949-423-6464 or email her support@cfrn.net, I'll meet with you at some time this afternoon that fits with your schedule, okay? So maybe you've got, I don't know if you have the day job, you got to work, whatever the case, communicate with Valerie. She'll coordinate. You and I can get together, if not this afternoon, sometime early evening. Remember, I'm on the West Coast, so I'm up later than most folks. But reach out, let me know, and we'll get this squared away for you. Okay? All right. Overcoming rejection. Proverbs 31:18. She perceives that her merchandise is good, and her lamp does not go out by night. The mistakes you have made may be big, they may be bad, they may be frequently repeated. Some might just call you a loser, right? But whatever you've done, whatever mistakes you've made, no matter how frequently you've repeated them, that has not changed God's mind about you. And you think, well, of course it did. Come on. I'm a loser. I keep screwing up, and not only do I keep screwing up, I keep doing the same stuff over and over. He can't love me anymore. But he does. I have loved you with an everlasting love. Everlasting. I have drawn you with unfailing kindness. I will build you up again. You will be rebuilt. Now, that's Jeremiah 31:3. But don't get me wrong, God will correct you when you need it. But his correction is not rejection. It's proof of how much he loves you. Hebrews 12:6 says the Lord disciplines the one he loves. Now, if you truly love your child, you're going to discipline your child. You're not going to let them call the shots, make the decisions, go out and play in traffic. I mean, it might seem like great fun to them, but you know better because you're the parent. So you have to put your foot down. You have to draw the line in the sand. Because a child needs boundaries. They got friends. They need a parent. You got friends. You need a heavenly Father. Right? The Lord disciplines the one he loves. Hebrews 12:6. Now, God's purpose in discipline is to develop you to your highest potential. I mean, that's what any good parent wants, right? You want what's best for your kids. You want them to have it better than you did. Discipline is to help you develop your highest potential. So whatever mistakes you made, and no matter how many times you've repeated them, don't let anybody put you down. Be your authentic self when you're with others. Focus on what you have to give rather than on how others perceive you. What other people think of me, none of my business. That's their business. I'm only concerned about what God thinks. For me, that's what's really important. Don't put on airs. Don't brag. Don't name drop in an attempt to level the playing field. You're already equal, even if you don't have a similar education, the same experience. Maybe you don't have the same financial status or social standing or background or any of those things, but it doesn't matter in God's eyes, because God put in you whatever He needed in you so that you could fulfill your divine destiny. Now, the things I just mentioned: education, experience, financial status, social standing, how many likes you got on Facebook, how many people follow you on Twitter. Since when did such things make anybody superior to another, especially in the eyes of God? If your goal in life is to please everyone so that they'll all speak well of you, your self-worth will always be at their mercy. And that's not what you want. That's not how you want to live your life. I want to see myself in the reflection of God's eyes, not man's. Solomon describes the qualities of a virtuous woman. Here's one of them. She perceives that her merchandise is good. This woman wasn't prideful. She was just confident in who God had made her to be and the assignment He had given her to fulfill. Her confidence came from within, not from without. In fact, Solomon ends the chapter with these words, Proverbs 31:31. Honor her for all that her hands have done, and let her works bring her praise. That's our good word for the day. Again, if you are ready to begin the journey, okay, you've had enough of the gimmicks, the parlor tricks, jumping through hoops, being a trained seal at a circus, and you just want to know how markets really work so that you can understand how to build a successful business plan, trading plan, a strategy that's already been vetted and traded by thousands of traders all over the world. No more parlor tricks. Just the truth about trading. If that's what you're ready for, go to EminiFuturesTrading.com. If you have questions, call us 949-42-EMINI or send an email to support@CFRN.net. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.